All right, so we can get started. Welcome, everybody. So this is the second episode of CyberBulls. And if you were here with us last week, it's a weekly series that we're doing on both YouTube Live and Twitter Spaces. And we're going to do our best to just better understand what's happening with our investments and are we making the right decisions. So some of the topics we're going to cover today, Xander made a recent trade. He made some sort of option move, and I don't even know what it is yet. And we're going to find out why he did that, what he did. What percentage of cash of your portfolio should be in cash on hand at any one time? How do we know that Tesla is actually considered to be low risk or recession proof? I'd like to find out more about that. And what's the actual lowest price that Tesla can actually go? As of what we know today, what's the stock price that we think that Tesla should not go down any further than that? So somewhere halfway through, we're going to have a new guest bull joining us. So that's Jeffrey Lutz. He's going to share information and tell us a little bit more about this Inflation Reduction Act that we just had. And then if we have time, there's going to be a new segment, the Matador. Well, who's the Matador? It's Elon. So how much do you think Elon actually affects the movement of the stock? This Twitter overhang has been hanging for a little bit too long. And then if we have time, I'd love to share more information about margin loans and all that great information about how to get low interest rates on margin loans and how to do it safely. So as a reminder, we are three bulls, and we all have our own philosophies and different about investing. And then I should point out that we're actually friends. So, occasionally we might make fun of each other. And some people were telling me that last week I was being a little bit being a little bit rough. And so to be sure, I'll tone it down a little bit, but rest assured, no one was harmed in last week's episode. All right, Christian?
Okay.
You're okay. Good. All right. So let's get started. Christian Valente. You can follow him on Twitter at cvalente. He's a retired ex-financial advisor, and he's what we call the Stoic Bull, believes in momentum investing. Xander Sky. So Xander is a YOLO bull. You can follow him on Twitter at R6Alex. And there's me. I like to call myself the forever bull. I find a stock, I stick with it forever. So that's who we are. And so let's get started with you. Xander, you said that you made some sort of big trade last week. What was that? What was that all about? Oh, I gotta ask you as a speaker. There you go.
Thanks for having me. Love doing these things. A big trade, I actually didn't go through with it. So I had a topic that Christian and I covered, and I imagine other people were thinking it as well. Seeing that we're ripping up, it's hard to not want to sell the rip, especially in this trader's market. So I contemplated selling off all of my losing shares and riding the market down a little bit. But considering that the stock split is going to happen, and then we might have a credit upgrade, I decided against it. So that was the thinking behind it, and Christian could add to some of the feedback he gave me.
So you didn't go through with it? Okay.
I did not. I almost did, and even yesterday I had a sale for the corporate shares that I oversee to sell it at 914.69, and then at 913 it was such a nice wave up, I just canceled it, and of course it went to 915 and change, and then turned around and went back down, and then today we saw 840. So I actually picked up some more shares for the corporate account. I like to, for the last couple of weeks, I've been selling the rips and buying the dips, and just doing that and just scalping, $500 to $1,000 or so with a little bit of change.
Yeah. Well, one thing I really like about you is that you've been saying that you actually are to keep yourself accountable. You write everything down and you actually
Yeah.
publicly announce some of them because you want to be sure that you can track everything and you're going to see whether or not your strategy is working, right?
Yeah, I think it's very important to be honest with yourself, and we tend to remember the wins and forget the losses and brag about the wins. I tend to spend as much time bragging about the losses or the bad moves that I make, and having someone like Christian to bounce ideas off of has been transformative to my investment style. I've just changed how I think about things, and it's really helped.
So, Christian, were you the one that talked them into trying to decide to sell some of the Tesla stock, or the other way around, talk them out of it?
No, he approached me and he had spoken about possibly doing this, and I told him, "Are you sure?" Because his old strategy was he was long and he was going to ride it out, and there was no selling of shares, and this is going to the moon, and that was his original approach as he spoke about last week. And I kind of just the way I approach it is more, conservatively, and not everything is going to the moon. And there's periods to be aggressive, and there's periods to take some chips off the table, as you know. So I guess I've kind of rubbed off on him, and he's kind of thinking more my way rather than just, everything. The stock market only goes up. The old saying, the memes and stonks only go up. He's looking at it more from a approach of, well, let me really think about this. Let me think about valuation. Let me think about, what is the Fed doing? So he's incorporating different things into his modeling to be a better investor. So I think that's great growth, and I love to see it.
But
Well put.
if you had sold it, Xander, you would have done well because its stock fell significantly, right?
Yeah, it would have worked out. That was the bet, but the long-term thinking makes it that it's the risk isn't worth the reward. And I have tax consequences, so that was something that I really needed to factor in. And so it would have worked. Because the gain, it would have been a tax loss harvest, that was my goal with the thinking there, and I couldn't buy shares for 30 days. So what really made it was the stock split, and then this credit upgrade. I just you were seeing numbers like Shanghai getting to September like a 96,000 run rate with like 3,200 cars, and it's just I think at some point they're going to have to upgrade it. It's just been way too long. So that was the major consideration. So
All right.
I just don't want to miss that rally, which the stock feels depressed. We're just waiting for macro to really clear out. There's a lot of talk about it being a bull trap and just a bear market rallies.
Yeah. So you do see the investment grade credit rating as a catalyst. So thank you for that. And so, Christian, the economy, what's going on? What's happening tomorrow? And when people are feeling good about the macro, isn't it? Or something wild going to happen?
I'm more positive about the market, but there's still a lot of people in the market that are negative. CPI is tomorrow. That's going to be huge. Inflation needs to come down. If we get a print and it's over expectations, the market's probably going to sell off. We've been dealing with this for a while, so I don't know how bad the reaction will, but I'm expecting that print to come better than expected, and I think the market will rally on that. As far as Tesla goes, this is, for me, again, we've been doing these Twitter spaces for weeks. This is not the time to be scared. We've already had a major correction in Tesla stock. Again, just not to repeat, but we're going into what we think is a record Q3 and 4. So to me, even despite of the macro, I don't know why you would sell into this moment with the credit upgrade, with the stock split. There's just so many good things. And Tesla's business is hitting on all cylinders, like Xander said, with record Shanghai, production, possibly 80,000. And then September could even be more, maybe closer to 100,000. You got Fremont, Elon tweeting, Fremont is kicking blank, a good thing. So, a shout out to Fremont, which he doesn't normally do. It's always Shanghai. So that's a great sign. And and we got the other two factories. So it's just so much going on. I use these dips like we came into this mid 80s again. I'm adding some shares. So I'm not looking to sell here. I'm looking to accumulate for that next big run into the $1 trillion market cap. So that's what I'm looking at, and I'm excited.
Can you just explain to me specifically, because I don't really know very well. Tell me about the consumer price index happening tomorrow. What is that print, and what did you mean by if it comes in over expected, it actually is going to cause the stock, the market to react badly? What I thought it'd be the opposite, right? So tell me, explain that to me.
So the CPI is basically it's basically an inflation gauge, consumer price, and basically it's month to month. So we're looking at expectations from the previous month. Oil has come down, so we're hoping. We actually have to see it though, right? We know commodities have come down. We know oil has come down. We know gas at the pump has come down. But now we want to see it, right? We want to believe it with our eyes. So we want the print tomorrow to be under what the market thinks. So if inflation is worse and we've seen oil come down, that would be a head scratcher, right? So we want the number to come down, and the lower the better, because if inflation is coming down, that means the Fed has to do less, because the job of raising rates is working. It's slowing down inflation, it's slowing down the consumer. So the thinking is the Fed has to do less raising of interest rates, which helps the stock market because the consumer's not so crimped. So basically that's what we're looking out for tomorrow, 8:30, that will hit. And I think if we have a good number, that's also good for growth stocks. So that's what it means. It's basically, what does the CPI print have to do with inflation's expectations going forward? So if you see a real great number, that's great for the markets.
Okay. And then explain to me this term beta. Jeffrey has explained this to me a bit last time, which is that Tesla is one of the tech companies that is a beta stock. So it overreacts compared to normal stocks, both down and up. So when the market is doing well, like tomorrow, if everybody starts feeling that the economy is finally out of the inflationary runaway inflation, and the rates won't be as bad, and people are now, even Elon, right? Didn't he just last week say that he thinks that we're going to be in a mild recession for the next 18 months, but it'll be mild. So that gives permission for the economy to feel good about investing again. Because Tesla is a beta stock, it should overreact on the upside, like 2 times more than other as everybody goes up. Is that right? Explain that a little
Right.
bit.
So the way you look at it, and just real quick point to Elon, he also said commodities are starting to roll over. So that was a good sign that since Tesla is so involved with so many different things, with battery sourcing, minerals, he sees so much. He said he sees inflation coming down. So that's a good macro bit. The beta part of it, basically for the audience, it's real simple. Say Tesla's a beta of like 2 to the market. So if the S&P is up 1%, the saying goes that maybe Tesla should be up 2%. It doesn't work exactly, because Tesla's its own animal. Sometimes the market could be down 3% and Tesla's up 5%. Sometimes it basically just means that Tesla moves more than usually the S&P 500 does, or say the triple Qs, in either direction. But depending, good news comes out, that could be thrown out the window. So you're right. If the market does start to catch and the S&P starts to rip up 10%, say that over the next into the year end, the S&P is up 10 to 15%. Odds are Tesla's probably up 30, 35%, 40%, because you're right, of the growth and the outsized move compared to the S&P. So right, if the market gets its legs, they're not worried about inflation, the Fed goes to the side, Tesla stock should do really well. And don't forget the fundamentals, record Q3 and 4, record EPS, record revenue, record everything. It's going to be great.
Yeah. So Xander, what do you think, like, if there's a move of the money to tech stocks, but many of the tech stocks are damaged, like I don't want to put my money in Facebook or Amazon or Google, would that mean that more people are willing to put their money in Tesla, or it doesn't work that way?
I think when you have these companies that are, quote, damaged, as you called it, it's an opportunity. So you see companies rip up 50% on some kind of guidance that or on earnings that are better than what the expectations are. So I don't know if that specifically means that people will buy Tesla, but the investor that is still a little skittish and worried about further downside, they're going to look for companies that have growth and putting up big earnings. So that's how I think about it.
Okay. Wonderful. So last week, Christian, you had said that in your strategy, in your philosophy, what makes you feel good at night is you have a certain percentage of your portfolio in cash. You called it, what did you call it, Tinder? So that you
it's
Kindling?
buying
What?
power, essentially.
But so some of that cash you want ready to invest when you feel like it's a proper time to invest, but some of that you want to feel safe, correct? So what percentage, again, nobody's here making financial advice, but for you, what do you think is a proper percentage that you should keep as cash on hand compared to your value of your portfolio?
So that's a great question. So everybody's different with this. This is here the way I do it. So I always like to have some cash. Usually, if you're in a bull market, you don't want to hold too much cash because obviously the market's ripping up and you want to be participating in it. But the market doesn't always go up. There's downturns. So depending on what your situation is, if you already have a huge amount of capital in, you might, if you think the market is going to take a downturn, and especially maybe a big one, if you're in a big growth stock that's had a huge run, you might want to take some chips off the table. So if that stock comes in, you're able to buy it. So I've had cash positions up to 50, 60%. Right now, my cash position probably, it's lower. It's probably in the 10 to 15% area.
And was it at 100% recently, Christian?
Well, probably close
zero.
To it.
And was it at zero at one point?
Yeah, so at one point that I had so much cash, 90% plus, kind of when the Fed started and we started to roll over, I started selling because I want as much cash to buy what we are seeing now with Tesla in the 600s. Google came in. So just different stocks. Even the regular indexes, I put some money to, like the triple Qs. So yes, it gives you. So as the stock's coming down, if you're all in, and Herbert, you can maybe attest to this or give your experience. If you have a stock and it's down and you're holding it and you have a huge position on and it's down 50% and you have no money or essentially very little money because your position to the money you can put in is very small, you're sitting there like a duck. You're just getting rammed, and say you had 500,000, now you got 250, and you can't buy the dip. So it's a little bit of a trader mentality, but it feels good to know, okay, this is after a run up. Let me take some chips off. And it may go against you because it may continue to run up, but you've done well. So the idea is you have buying power on the side. So if the stock or the index or whatever you're doing comes in, you have firepower to buy those cheaper shares for which then they go up higher. You're going to make that much more return rather than just sitting there taking the 50% decline. Then it needs to go up 100%, literally double, just for you to get back to even. So I don't like that strategy. I like to be able to buy dips.
My question was, were you at 0% cash recently, and did you raise some cash? Can you speak on that a little bit? I think it's good for people to hear.
Yeah. So we've had a market run. So this is me, I was in the market. I was adding as we were bottoming, and I felt more bullish. I was buying. So I got to the point where I had very little cash, almost no cash, because I was all in. Now, the market took a little bit of a turn. So as I saw that little bit of a turn, since I didn't have a lot of my money's in, and whatever more money is going to be very, small compared to what's already in there, this isn't a retirement account, so there's no tax consequence. I liquidated some positions in order for me, if there is a downturn, that I can buy that dip. Now, here's the difference. If the market doesn't downturn, because I don't know exactly what's going to happen, it's my hunch. But if it doesn't and it keeps going up higher, remember, I'm already in. I didn't liquidate the whole thing. I just took maybe, a 10, 15, 20% position of cash to buy dips. So if I'm wrong and there's not much of a dip and it keeps going, then the other position will, do very well. And I could always add that money back in at another time. So that's the way I think about it, and that's my approach.
And when did you do that? Last month you're talking about this?
I did this like in the last week. Well, I do it all the time, but I've been doing it about the last week.
Whoa, your audio's switching up.
We can't hear you, Christian.
Oh, can you hear? So I've been doing this last week.
Wow.
This specific thing that I was doing, but I'm always kind of trading around the edges, like Xander spoke about. But I did this particular thing in the last week when Tesla. I thought on Friday Tesla would continue to go, and it didn't quite work out that. Remember, we had that bad day. So I had done very well because we were buying in the 6s and the 7s. So I just took a piece of that and some other stuff, some index stuff like triple Qs, just to raise some cash in case, the inflation report's not so good, or, maybe, this is a bear market rally, because no one knows. So, if you're already all in and there is some type of downturn, and you hold it for 2 to 3 days and maybe you get a massive 5, 10, 15% decline, you'd rather be buying that than just sitting through that, and you don't have any more money to deploy. So,
okay.
Christian, do you end up buying leaps with that money, or do you do straight shares?
Right. For now, I've been doing straight shares, but I know the strategy you taught Herbert. I do have leaps in Tesla that I've been holding, that I bought when Tesla was in the 600. So I'm not really playing with those. I'm letting that play out, let that story play out. They're profitable. I could have took some profit on those, but then you're just playing a game with them, buying them back, and they're not as liquid as shares. So, you got to get the price right, because sometimes there's big spreads, there's not much trading. So those I'm just leaving, and I'm doing the bet kind of Herbert, like they're June 2024s, and they're basically, 1,000 strikes. So my bet is, do I believe Tesla will be $1,000 by June 2024? I think it'll be much higher than that, and those leaps will do very well. Those long-term call options for those at home, they'll do well. So I'm not really kind of messing with those.
Okay. Yeah, this is how I felt, because right, I am a long-term holder. I bought as much as I can. I put as much I have only cash to protect myself as a safety net, but not as what you call, what is it, dry tinder, to be able to invest when the price falls.
Yeah.
Okay.
Just cash on the sideline, buying power. Yeah.
Dry powder. It's dry powder.
Dry powder. I'm sorry, guys.
Tinder. I'm thinking of Warren on
a dating app, not a dating app.
Dry powder. Okay, that's the right word. See, I don't even know the term because I don't believe in that philosophy. So I'm learning. Okay, I'm learning, and so Xander taught me about long-term leaps. We talked about last episode, and I did that.
So before you continue, I wanted to close that thought. I think it's important because it goes to exactly what you're about to say, or what you were touching on. The idea behind buying leaps when you're super low. Yes, you can go the full distance and like wait a year, especially if it's in a taxable account. That is a great strategy. But if you're thinking that you're reaching local highs, it might be a good idea to flip that back into shares, and then if it goes down, it goes down slowly. But if it goes up, you're de-risking in that regard. So yeah, I hope that made sense.
Okay. So what I was saying was that I'm long-term investor. I don't do any of these things. And then Xander taught me a little bit. I dipped a little bit into it. Okay. Now I have FOMO, and you caused a lot of pain in me, Christian, because I did watch the stock fall, right? I put in a lot of money when it fell from 1,200 to 1,000. I switched all my Apple at that point, which was February, March of this year. And then I held it. And then I watched it fall to 600, 650. And you're going, I'm going to now buy. And I'm like, I don't have anything. Damn it. Caused me pain. But so yeah, that's how I feel. But at the end of the day, I can't feel this way. I cannot feel regret or concern or market fluctuations affecting my emotion. So that's why I kind of lashed out at you last episode, because it's a little bit of this, you're dang right. You are right. You are smarter than me. You did the right thing. But I just got to stick to it and think 3 years, 5 years from now, don't play the game. I'm fine. Like you said, if everything goes up to the way we think it's going to be in 3 to 5 years, all these little maneuvers you guys are making, well, okay, I don't want to do it. Yeah, you're right. It can be huge. It can be huge.
Yeah, huge.
Yeah. It could be a big thing, right? Because if you're getting in at 600 and it went to say 1,200, well, I made 100% of my money, and you're 1,000 to 1,200, you made 20% on your money. So you can see, and but let me just say this one thing. It's not about being smarter. I wasn't smarter, and you're not smart. That's not the thing. Long-term investing, you're going to do great. The thing is, if for me, like I said, I've been preaching this. I can't sit through 50, 60, 70% drawdowns. It's just not my nature. So especially after, like I said, we've had a huge run from like we did the 20x. So in that particular stock. But even if like the triple Q, say that was up 200%, over a 5-year period or something, like there's nothing wrong with taking some chips off the table and waiting for better prices, especially if you know some macros coming. And again, I can't time it perfect, but there's nothing wrong with some dry powder on the sidelines.
Yeah, okay, but the way I explained it to my family, when the price falls that much, right? It's like people are going to ask, how do you feel and what's going on? Well, the way I think of it was, well, hey, come on, let's not forget that we started. I'll just throw up some numbers. I started when it was at $30. Now it became $300. Now it became $1,000. Oh no, it's now down to 600. Oh my God, that's a 50% reduction. You can't think this way. You can't
Correct.
think this way.
Yes.
Gotta just move it forward.
But okay. Yeah. Do you have, if you don't have any new money to invest, right? Then this is where the conversion into something like a leap makes sense when you're really high up, when the market's excited, right? Those implied volatility on those options goes through the roof. So it's a great idea to trim that. Switch it into shares, and then if it falls, then you convert back, right? This makes a lot of sense. Into like 10% of your portfolio, right? So even if you make a mistake, you're not crippled, but converting it down, converting when you're that low, it felt weird, right? It felt weird, but net you're up. You're up quite a bit. So that's where, if you don't have new money to invest, you want to have some kind of strategy for have some cash, so that even if and selling a portion of your portfolio off might make sense, because then you can, when it dips low, if you don't have any leaps, you buy a leap, and then when the market recovers, you're accelerating. So it feels good. Psychology is great, right? Because your portfolio, in the grand scheme of things, ends up growing, and you're able to buy the dip, which feels great.
Okay, let's answer the question that I asked. So, what percentage of your portfolio should be in cash at any one time in order to do the what is it called? Dry
powder.
Dry powder. So go ahead, Christian.
You've been on that app too much, Herbert.
Dry powder. Christian, what's your percentage that you would have?
So
your portfolio,
it varies. Like we said, I was close to being all. Yeah, it varies because I've been up to close to 100% at some points. I've been at 5%. It depends in where I feel the market cycle is. But right now, I would say I'm bullish. So I would have less cash, if that makes sense. So I'm probably in this 20, maybe 15 to 20% area for now.
Okay. Yeah, and I think it really depends on the size of your portfolio, to determine how much, right? Because you could do, if you have a multi-million-dollar portfolio, you 10% is a lot. You could buy a lot of leaps at 10, with 10% cash, but if you're in hundred thousands or tens of thousands, the math is different. But I think it's really dependent on the circumstances, right? Like if you see you're in a bear market, it's probably a good idea to raise, or you're heading into one, or potentially into one. Yeah. You want to start raising cash, and that's my greatest takeaway is, I've only seen the bull market. So then it's like, oh, well, I really wish I would have raised some cash prior to, ignoring the hopium, right? And continuing to see that, oh, maybe we'll turn around. Maybe we'll turn around. Well, at some point, just raise a little bit.
And real quick, that's a great point, Xander. This is the trick. And it's a hard trick, but this is the trick. When you raise the cash, you don't wait for the bear market and you're down 20, 30% and panic because you're going down 50, 60%. No. The time to raise the cash is from a position of strength when you've ran at higher prices. You don't want to sell after it's occurred and panic sell it down and raise cash. No. But you needed that. That's where the discipline comes in, because no one wants to sell when the thing's rocketing, because they think the greed factor comes in. It's going to rocket some more and I don't want to miss it. That's where you have to discipline yourself and say, we've just had, a 40% move in a month. And I think we've had moves like that, or, we've doubled, in 3 months. So that's where you want to chop it and wait, not, now you're down 30%. Oh my God, we're going to the end of the world and let me sell. Wrong strategy.
And Tesla does that too, right? Is when they were raising capital before, when they needed to, they were raising it when, and that was actually putting in the top was when they would dilute shareholders and raise some capital.
But they're doing it was high.
Right, when it's high. So
right.
The same
so
idea.
You dilute less. You dilute less.
And you'll miss some of the upside because you can't time it perfectly. But the point is, if you're doing it, especially if you're converting something like a leap that has a high implied volatility, then you're banking a good amount, right? You want to sell leaps on the way up, not once they turn around and start falling. And same thing with the selling a put. You want to sell it as the price is falling, where you think it's going to bottom out. That's the strategy with options.
Yeah. So
and I just want to say something real quick, Herbert. This is just my strategy, and I know there's a lot of Tesla people out there, and they don't sell shares, and they add, and they never sell. And I get it; they're in it for the long term. I totally respect that. I love those people; they're the best. But this is just my commentary on it, and like I said, so it's just the best strategy is the one that works for you, that you can sleep with. Yeah.
I think the secret of everything is actually we position ourselves as 3 different bulls with 3 different investing strategy. But the reality is, I am learning from 2 of you, and I'm going to mix and match. And I'm sure you're all
bingo.
Yeah, you got it. So I think one thing that I need to understand is my philosophical, emotional, right? What was it called? My emotional makeup. And you said it earlier. Some people are hurt and pain when they lose money versus the potential if something gained and you didn't get it. Which one are you more hurt by? And I'm probably the one where I'm not as hurt by a fall. It's painful, but it's not as painful as I didn't make a gain.
You're the opposite, Herbert. They've done studies on this, and they've shown that a loss is more impactful to someone than the gain. The gain is not as exciting as the loss hurts them. So you're actually different from what the study shows. Because people hate losses, and the gain, they go, well, of course, I want it to go up, so it's not that exciting. But they hate losing money. People hate losing money.
Yeah, I'm an optimist. I think things are going to work out great in the future. That's how I look at things. Okay,
they will.
So let's next, the big topic of what we titled this whole thing is, how do we know that Tesla is low risk? In the last episode, Xander, you said, just threw it in there, and you said, well, because Tesla is what did you call it? The most risk adjusted investment ever. What did you mean by that?
Yeah, thanks for noticing. It's just when you compare it to any equity out there, or or an index fund, in terms of potential earnings, right? You see these growth companies like Palantir, right? It's considered a growth company, and people are investing into that. And then you look at their growth and what their actual earnings are, or lack thereof. You end up with just it's a bad investment. There's too much risk. They can go bankrupt. Their competition can come. Like all of the things that we hear about, spoken about Tesla. You look at it, it's like, are you investing in one company, or are you investing in this energy business and this insurance business and all of this other stuff besides cars? And so yeah, when you look at the numbers and you look at what they're actually delivering, once that bankruptcy risk is gone, and they have cash in the bank, they have a war chest, they don't have any debt. You start analyzing those things. How do you put your money anywhere else? Like we mentioned Lemonade last time. Like I've been, I'm licking my chops here, watching this thing and listening to Christian doing his victory lap. So it's like, it has a lot of potential. So at some point, when when I see that there isn't a bankruptcy risk with that kind of company, which I'm starting to see as I do more research, potentially you start allocating a little bit of funds there. But for me, it's just, this is the psychology differences. I'm 100% all in Tesla. How do I go away from that? Right? It's just like you. I never sell. How do you pivot that? It's a difficult thing. So, but back to your question, I think it's just if you analyze the risks versus the reward, it's the greatest one that I've seen. It's a generational kind of company that has the biggest upside. I hope I'm answering your question. I'd love to hear what Christian thinks about that same question, and what you do as well.
Yeah,
I think now Tesla has become much lower risk. I never say anything is no risk. Everything has some inherent risk. There always something could happen. I'm always looking over my shoulder. That's how I am, especially with investing, especially when you're dealing with, significant amount of money. You always have to be looking what's around the corner, because, it's going to come out of left field and you're not going to see it. So you always want to be watching it. But I think the business where it is now, the difference between Tesla and, like, say, something that Xander said, Palantir. I know, like, there's a big YouTube community, a lot of YouTubers, they love Palantir. But if you look at Palantir over the last few quarters, every quarter they're disappointing. Their growth is slowing. And remember what we said, when you're a growth company and your growth is slowing, you're dead. And the stock price has come down. It tried to rally a little bit, back down, because the earnings is just slowing, right? The growth is slowing, their sales is slowing. Where Tesla, it's the opposite. And this is why I think the opportunity is great right now. You have Tesla every quarter accelerating earnings, growth accelerating with a decelerating stock price. So just simple math, it's going opposite what it should. Again, this will correct. And when it corrects, you want to be sitting there waiting for that correction. So there's a lot of growth stocks that they're called a growth stock, but Tesla's actually delivering quarter after quarter after quarter. And I think 3 and 4 is going to be the same. And, they're going to get credit soon, and it's coming, and you just have to be patient. And frustrating. I know, Herbert, you want it to be to the moon tomorrow, but this is investing. A lot of investing is very boring, very dry. Some of it's exciting. We've had some exciting times after COVID, but a lot of investing is just being patient, keeping that, mindset, grind it out every day. It could be red, but you just keep, adding where you can, keep calm, and you'll be rewarded in the end. Yep.
Yeah. So obviously I like to do trick questions, and I did another one with you from my perspective. So risk is obviously balanced with the gain, right? The potential opportunity against the risk, right? If it's a really high risk, you're expecting it's high risk and you're willing to accept it if there's a huge potential gain if it works out. I think it's low risk today because there's very little chance for Tesla to go bankrupt anymore. I started investing in Tesla in 2012. And I kept investing in it in 2018 when that was the highest risk. I think it's 2008 and 2018, Elon would say, where the company basically was in the brink of bankruptcy. And they pulled through miraculously. But I invested in it when it was high risk, chance for this company to fail and all your money's gone. But the potential gain was massive. Right? Because
were you 100% then?
No.
No, right? See, okay, that makes sense.
I was 50-50 because I was slowly moving my money away from Apple into Tesla. We love Apple because of the dividends. I mean, that was like cash flow flowing in, and so to make a decision to move from Apple to Tesla was the loss of actual free cash coming in. But the gain in my mind, so that's what I just did. But now there's really low risk in the sense that the company's not going to go down for the car market. And so I'm going to invite Jeffrey Lutz to join us. Hello, Jeffrey. Can you unmute yourself on
hey guys.
Twitter
Everyone.
Spaces?
Yeah. Can you hear me okay?
Yes, there you are. Hey, Jeff, how are you doing?
Good. We got the audio working?
I think so. Thank you very much for joining. He is our guest bull. He has been participating in our Twitter Spaces quite regularly, and I asked him to join because he brings a lot of gravitas to our conversation from my perspective.
I don't know if that's possible.
I mean, so we'll go through your background a little bit, but you're a supply chain expert. You've been in manufacturing. You mentioned last week that you were the person that helped launch the Motorola Razr at the time, the cell phone. But yeah, so what's your thought? First of all, for all new bulls that we're going to have to join us in the ring, we are going to need to understand your investment philosophy, and we need to name you. We're going to name you. We get to decide what name we give you, but you can tell us what you think you should be called. So what's your investment philosophy?
I would say, I mean, I'm pretty high risk from an investment perspective. So I like to let it rip a bit. I mean, definitely measured, definitely do a lot of research. And I also think long term. So, I've been invested in Tesla since 2013 when I first test drove the car. So very long term, but also I would say on the higher risk side.
What would you call yourself? What kind of bull are you?
I don't know. I haven't thought through different bull names. I'll have to come back. That don't have expletives in front of them, but I'll come back and think through that.
Are you crazier than I am though? Like, are you more convicted in this? And are you all in?
Yeah. I mean, I'm definitely highly invested. So whatever that means, I'm definitely highly invested.
Jeff, do you trim your position, or are you
occasionally? Yeah,
okay,
occasionally. So, definitely looking, for major run-ups. But yeah, I mean, I like the overall direction right now. I think a lot of de-risking has occurred, and just a lot of milestones have passed. Is there risk in the future? Yeah, there's significant risk in a number of areas, but there's more gains that are occurring. And as this, EV tax credit is eventually sorted out, I don't think there will be product taking credit, quite frankly, early next year, based on how this is written. But as that's sorted out, I think Tesla's in the best position actually to gain from it. But it's going to take a while, I think, to sort this out. But between that, I mean, they've got demand as far as the eye can see. They don't need the credit. So I think from a demand perspective and just the construction of their supply chain has always intrigued me. From day one, they've been highly vertically integrated. And, when you reduce that network latency in your supply chain, you're generating cash, you're building cash, and you're preventing problems from occurring that the others were hit pretty hard during COVID and during some of these other supply shocks. So I think they're really set up well for success, but I'm also recognizing that there's risks always with any company, any product.
Can you explain what you know about the Inflation Reduction Act that was passed on Sunday?
Yeah. This passed the Senate. So it's passed the Senate over the weekend on August 7th. It's supposed to go to the House on Friday, and then probably to the president's desk, a day or two after that. Could be signed on the weekend, could be signed next week. It's expected to be signed. The Congressional Budget Office is, it's a budget office that's nonpartisan, that does an analysis of the bill. And they're looking at roughly $300 billion deficit reduction over 10 years. It's not a lot. And there's a lot of things I think that could sway that in one direction or the other. But they calculated a less than 0.1% reduction in inflation over the next 2 years.
Wait, reduction in inflation?
Less than 0.1%. So when you heard Christian talking about 8.7%, 9%, this is a less than 0.1% reduction in inflation over the next 2 years. Per their calculation.
So like, to me, this is like an oxymoron, right? Like you're spending money to reduce inflation, and now you're educating me here. So you're saying that there's not going to be an impact to inflation by spending all of this money?
It's not me. I'm looking at the Congressional Budget Office. I'm looking at the analysis of this bill. This bill text is still being analyzed. It's 755 pages, but from the analysis put out so far, it's very minimal. And usually with bills, it's from any administration, by the way. Like usually if you look at the name of the bill, there's something behind the naming of that bill, like the opposite could be going on somewhere else.
Yeah.
And so when you see the Inflation Reduction Act bill, your should go up. I mean, the one of the concerns with Build Back Better was, hey, we can't do more spending, throw all this money in the economy, and just ignite inflation. And I think the spending in this bill occurs over a number of years. It's not like there's this massive shock of cash going out like tomorrow. So I think from that perspective, it's pretty measured, but I don't see how it's reducing inflation. Then you get down to our topic, which is EVs and Tesla. I mean, that's a supply constrained industry. And the worst thing you can do in a supply constrained environment that has more demand than supply is to inject, free money into it. That's not going to actually solve any problems. What's going to happen is all the OEMs that build cars are going to increase their prices.
Yeah, if I could just comment on. Yeah, I was going to comment real quick, and this is a little political, but it's not going to be nothing too crazy, Herbert. So the Democrat, midterms are coming up. They want to get something done. They couldn't get Build Back Better done, so they renamed it essentially. Now I'm sure I haven't read it line by line. They renamed it Inflation Reduction Act because what's the big problem? Inflation. So it looks like the Democrats are doing something on inflation. That's how cynical I am about politics on both sides. So this is for both sides. So they renamed it essentially. I'm sure there's some things that are different, and they want to get it passed so they could run on something for the midterms. That's my cynical view of it. That's how politics works. And you're right. I don't think much inflation reduction is going to come out of this bill. If anything, there's probably, when we get done, there's going to be more spending than we think. So long term. So I think it's more political theater than and it looks like they're doing something on climate change. But the funny thing is, and as we see the bill, how many EVs are going to actually be used next year that can claim the credit? I'm seeing reports like almost none, maybe 11,000. So it's defeating the whole purpose of what it's trying to promote by, making the battery so small that, a hybrid could qualify, like a 7 kilowatt battery. So these are the things that, that's what drives me crazy about politics and politicians. And a lot of it's for show, and it really doesn't, long-term help the people. It just kind of greases the palms of the political elites. That's just my little cynical take, but I'll give it over to you, Herbert.
I have to tone it down. I was told to tone it down, so I was gonna go a little bit after you, but that's okay. Let's go. Stoic bull, but you're very emotional. Not very stoic.
When it comes to politics, my blood pressure goes through the roof.
But seriously though, like why do EVs need gasoline poured on the fire, right? Like they're already supply constrained. Tesla can't keep up. You see Ford and GM, they're not making cars. Like how many Lightnings did they sell? How many?
Their supply chains need to form their supply chains, and they haven't fully formed them yet.
Right. So how does incentivizing people to buy EVs, and then apparently I was learning that it's really small hybrids can qualify, as well. And how does that help the industry or inflation? It doesn't. You're asking people to spend more money. So I don't see how you're incentivizing the spending.
It helps legacy auto who sells hybrids survive.
It really helps that transition. It helps that transition. And then when you look at the mineral requirements, I'm reading that 40% of the minerals need to be mined and processed in 2023 or 4.
23.
Stateside or with a trading partner that is in one of our free trade agreements, which right now we get, the major mineral producers and miners are on the good side are Australia and Chile, which we can do trade with.
Also Canada.
In Canada, but then you have Russia, China, DRC, which we don't have those agreements with. And then this is supposed to ramp up into 2027, up to 80% of the minerals. So I think it's the right message in terms of like, hey, we want the engines that basically power EVs. We want that energy to actually be sourced, inside of our kind of our trading ring, and preferably from the U.S. The question is like, how long is that going to take? And is there a way to, ramp up into that in a little bit different way? So I doubt the House is going to make any changes, but there's a significant amount of noise on that. And there's also things in this bill around, extending oil drilling and gas leases, new gas leases. So there was a little bit of something for everybody. The senator from West Virginia is not going to be the one carrying the football on this bill if it's pure, just clean energy and inflation reduction. They want to get oil. They want to get these leases renewed. So let's go back to Tesla. Is it so far looking good for Tesla? Kind of like a neutral, or is it bad for Tesla? What do you guys all think?
I'll jump in real quick. I think net it's a positive for Tesla. The Model Y qualifies. It was the cap for the SUV was 80,000. So I think a lot of that, the source. So like you said, Australia. Canada gets a lot of nickel. I think that's why he's talking maybe a Canada gigafactory, because it'll help do that. And I think just the genius of Elon and the Tesla team will find a way to make sure that they can source or do this and things of that nature. And just remember with these bills, there's a lot of times that these bills, they're so intricately written. Sometimes there's a wink and a nod, and 40% sourced, what does that really mean if it comes in from a certain area? Like, you can kind of wiggle sometimes and get away, because this is going to look really foolish if in 2 years they passed a, EV, credit, and not one EV is ever going to receive the credit, right? This is going to look like kind of, so of course they can make some adjustments and do that. So I think Tesla is going to benefit very well with this. Is it going to take a little bit of, if they got to drop the Model 3 price down to under 55,000, because on regular car sedans, that's the limit. But I think for the most part, this is a really good build for Tesla. And they also have some solar stuff in there and wind, which is good for Tesla. So I think net, Tesla's a winner in this, even though, that might not be the goal for Biden and the Democrats. I think net, Tesla will win and do very well from this.
Mm-hmm. Jeffrey?
I agree with most of those points. I definitely, on the energy side, I see this as a benefit, solar and energy. On the car side, on the auto side, they have closed the gap. Well, it helps a little bit. It helps it helps their competitors actually become a little bit more profitable, and allows them to build cars in Mexico at those labor rates and bring them into North America as well. So there's some puts and takes, I would say. I would say Tesla didn't need it, but it won't hurt. But on the competition side, it's definitely going to help them.
Good. And what do we use, Enter?
I'm really learning about the bill and trying to understand, like you were mentioning that, or Jeff was mentioning, the 40%. So trying to figure out if it's good or bad. Ultimately, I think that Tesla doesn't need any help. Tesla customers don't need any help. You will open up, I guess, the floodgates again, but this is where it's contradictory to you don't have enough supply. So why are we trying to discount something that has naturally had to go up because you're trying to slow demand? Can you imagine if the prices were, if we had that $40,000 car, or that $35,000 car? It's just, yeah. So I think until the supply chain and catches up, I don't like government being involved with a free market. I guess that.
I think everything everybody said, I absolutely agree with. Everything you guys all said. At the end of the day, though, right? This bill basically solidifies the movement of electric vehicle adoption. It is happening, and it's going to be accelerated significantly. I think we all agree that this bill, and just the concept that every OEM is now going to be motivated and incented to do this. And so Tesla is going to be the one that's going to mostly benefit from this. I think that's the best thing that can have possibly happen for all of us. What I'm curious to see what's going to happen is how Tesla specifically, but all the others, will maneuver and change their strategy in terms of what they're offering to the market. Does this now force Tesla, or maybe to their benefit, come up with a lower priced variant of some car? Does it, reduce the prices? They'll try to reduce the prices and add on extra add-ons later to be able to, right? I mean, some people were saying that you can just buy the car with the lowest version of the tire and then add the new tire later or something like that, right? I mean, curious what will happen there.
Well, give you a good example. In order to meet the requirement, let's say the battery sourcing and the cells and all that, say you're going to buy FSD, which costs $12,000 now, and you got a performance or whatever. What they could possibly do, the easy workaround, is buy the car for MSMRP to meet under the limit, get the credit, and then you get the over-the-air software update after you purchase the car, and then you could either do the subscription or the $12,000. So that is a clean, easy way. And there's another thing about in the bill, it talked about dealerships, and people were saying, oh, it's for the dealer. It's not. It's basically the way it's written. A dealer is anyone who sells cars, and Tesla meets that definition. They definitely sell cars. So a lot of the bill was being, trying to be interpreted as unfriendly to Tesla. And I've listened to a lot of smart people on it, and I've done my own research, not great research, but I've kind of delved into a little bit. And to me, it does not look like it's an anti-Tesla bill in any way. I think Tesla will long-term benefit from this over time. Yeah.
I think Tesla's best positioned, in terms of software control of the car to turn things on and off, do it at different times. So I think they're in a really good position. A lot of their competitors are still doing cable upgrades for many components in the car. So I think they're in the best position for that. But one of the things I do get a little bit concerned about, I know Elon was mentioning that he's seeing commodity prices starting to roll over, and he's got visibility. He's got visibility in multiple geographies as well. The only thing I get concerned about when I look at it is the reason those commodities are rolling over is because of a pending recession and then demand destruction as a result of that, rates going up, or are they really rolling over because the supply chain kinks are being fixed and materials flowing and there's no more hiccups from a supply chain perspective? So I get a little bit worried that we may see a little bit of a dip and then a little bit of a rise again. That's going to be hard to control and manage from a company perspective. But as it relates to this tax credit or this point of sale credit, I think it's going to spur further adoption. I mean, people are going to hear about this. They're going to know about it. And the fact that it's point of sale makes it really convenient for folks. In the early days of Tesla, it was a tax credit. You had to do the following year.
Yeah. So just to understand what Elon said, though, right? He said that in an annual general meeting, when he did a speech, it sounded like he was very confident about the supply chain, their control for supply chain for Tesla specifically. And then recently he also talked about that he thinks that the recession is a mild recession that's going to be for 18 months. Mm-hmm. So I'm not as worried as you are, Jeff. I trust Elon. Remember when he called the friggin' recession? He called it.
Yeah, but he called it kind of more for 2023. It's kind of already happened.
No. He said summer. Yeah, summer 22.
Yeah, that's true. Yeah,
June 2022.
Don't listen to Elon. Listen to Elon.
It was at the height of the boom, and we're all excited. Then he said something that I was upset, and he turns out to be correct. There's way more to it than just him making guesses. His gut is really good.
And just to Jeff's point real quick, I think there is demand destruction, but I think it's demand destruction for legacy OEMs because their sales are down, year over year, 30%, 40%. Tesla's the only one that doesn't have demand destruction.
And
they got
Porsche.
Year weight lines. Yeah,
Porsche made like 1 or 2%.
But they don't sell many. That's the problem. How many people are buying Porsche Taycans? The Model 3 and Y are mass-produced vehicles that people want to get their hands on. Like, I love the Taycan. I love the look, but, it's not a mass-market vehicle. No one, it's like, it's not going to sell, like a Model Y or a Model 3. So, these niche competitors, I see reports, the iPace, they're like selling like 10 units a year. They're getting rid of units. It's a joke, really. It's really the competition coming that Chanos used to talk about, when he was short Tesla in 2019. It's an absolute joke. He would talk about the Audi e-tron, the Jaguar I-Pace. All these things have been complete flops. And the only true leader in automotive is Tesla. And I believe, in the next couple of years, they possibly could be the #1 manufacturer in the world of autos in the next, 3 to 5 years. I think that's definitely possible.
They have to hit over 10 million per year, correct? They have to beat Toyota.
Yeah, Toyota.
Well, yeah, but you got to remember, Tesla has to hit 10 million. But guess what? Toyota sales have been tanking. Toyota might go to 8 million. It might go to 7 million. It might go to 5 million. Nobody wants their cars, and they're having a hell of a time making any EVs of any of scale, or do they even want to? So it's not just Tesla going up; it's these people coming down. I don't think they're going to be selling 10 million vehicles in 3 to 5 years. I think they're lucky if they're selling half, unless they get their act together quick. Just my opinion.
Or the wheels will fall off.
Were you going to say act or something else? Okay.
Yeah, and you guys heard today that California #1 and 2 for the first half of the year is Model Y and Model 3. So Elon's prophecy of Model Y by revenue this year is, as he reiterated, is going to looks like it's going to come true, and the next year by volume. So.
And that's against all cars, not just EVs.
All cars,
right? All cars,
so
right.
And then California is such a huge market that if right, they call it the California Camry. I just learned that recently. For a reason, and it really is. It's really becoming a thing.
It's true. I mean, look at it. Like Honda, like they're doing it, and he's quite the prognosticator. We're gonna have to call him, something that rhymes with Nostradamus. But essentially, how California goes, usually the rest of the country catches up, 3 to 5 years later. So, California, even though I'm not from California, they usually set the trend, and it's happening, right? I think Texas is the next big place. Having the factory there, the demands for Teslas in Texas are going to go through the roof. And as many people that live in Texas, the demand and the easy of access to get those cars into Texas is just going to be like California. And I think Texas is going to be the new California for Tesla. And I think, we know this, but that was the greatest move, not only because of the state income tax and all the other thing, making the headquarters there. That move might go down as one of the great moves ever to do that, make Texas the focal point of your automotive business.
Can you, if you're going to make a statement like that, can you back it up with a few more statements, please?
I'm telling you, Texas is like, when you think about it, the Model Y will be, like Xander was saying, revenue and units. It's going to happen. And
yeah, but you said Texas. Why the move to Texas is the greatest move in the automotive history?
Well, there's a couple of reasons. But here's why. Texas is a huge state, right? I don't know, it's #1 or 2 or 3 in people. Texas is very business friendly. Elon got that factory down and up. It's probably the biggest factory in the world, if not one of the biggest. I'm not 100% sure. And he said that it would take, the same amount of time just to get the permit in California. So if you want to get things going and you want to scale, you need it. And Texas is going to be very business friendly. So if he's done that and that's successful, who's to say he doesn't do something right next to it and keeps using Texas as a great, that Governor Abbott's very business friendly, and Elon doesn't have to jump through hoops to get stuff done there. He can kind of say it, of course there's regulation, but he can get the things done he wants. So when I say it's the greatest move, it would have been a terrible move if he put it in say where you're from, Seattle. I'm sure you had a hard time putting a factory in Seattle. So
do not put
it was an obvious move. Yeah, it was an obvious move, Texas. But even if it's obvious, it was a genius move, and the factory's beautiful, and he got it up and going, and they're starting to scale it up. So I think it was just A+.
Yeah, they have room to expand in Texas, and they really didn't have the room to expand in Fremont. The permitting, the timing, I mean, those are all big reasons to go and to build in a state like that.
Well, my understanding is that they did the tents because they couldn't get permits to build the buildings for the Model 3. So, in California, to be fair, like Elon recently said, that he loves California. They just outgrew it, and then it takes way too long to get anything done. So, they just need to scale. And how do you do that in a state that stifles it? Unfortunately.
So Omar was just at the Gigafactory in Texas, part of the annual general meeting, the stockholder meeting, and he said that it was full of cars. It was full compared to what it was in April when we were all there. There's just so many cars being produced at this point. So, Jeffrey, when do you expect that Texas is going to be in mass production or high volume production, whatever terms we're going to use? Sounded to me that Elon was pretty confident that we will get to, what is it, the 2 million run rate by December. And so that means that he's solved 4680, or not solved, but it's all delayed. We know it's delayed, but he said it's not about the 4680. It's about just production of cars, and it looks like it's moving along better than it was.
Yeah, the approach of ramping an existing qualified product line in a new facility is always a great thing to do. So Model Y, known, ramped in Fremont, ramped in Shanghai. Now you have a new facility, new people. They're bringing the 2170 version of that car. They're building it now. That is a great move, both for supply and to just bring up a new facility. Just everything you have to do from material order flow in through product out. It's good to do it on a known platform, because a lot of times you're bringing up a new factory and you're bringing up a new process, and that's very difficult to do. So I think they'll be, I think they're going to get the 4680 ramped up by the end of the year. Question is it going to be sufficient quantities for the run rate needed in 2023? I think that's the question that needs to be answered. But I was very excited to see the 2 million unit run rate by the end of the year, again, discussed on the earnings call in July, and then reiterated, 3 or so weeks later on the AGM meeting. And again, a lot of things were reaffirmed in that meeting that were, extremely exciting. It means that they've got a really good view in supply and demand for their products and their company. So, that's, if you're an investor, that's great news.
And just to be I love Tesla management, but I think this is one little point where they thought they could try to get away with something, but it didn't quite happen. I think the reason Austin especially is started out really slow is because I think they thought 4680 would be ready, and it wasn't quite ready. Correct. I think if they would have just started out with 2170 and said, you know what, we'll work on 4680 from the California facility, we'll get them in, we'll start training them, but we got 2170 ready to go right off the bat, I think we would have seen a faster start to the production. But they tried it, but now they got the 2170. So I think slowly into the end of the year, we're going to start ramping here. But I think that was a slight miscalculation that, if it would have worked, it would have been great, but it quite didn't, pan out the way they thought, but they'll get there.
Yeah, so I've heard that August, this month, is going to be the highest, Tesla's going to break records for how many cars they can produce in a monthly basis. Are we going to see record numbers every single month, basically?
Especially the 5 week months. Yeah, especially the 5 week months. And if you think about it, they were doing upgrades in multiple facilities. So when you're doing those upgrades, I'm assuming they're not shutting off their inbound suppliers, and they're running. So they're building up, inbound supply. So that's going to really help. So not only you're going to have expanded facilities, but you're going to not have material disruptions.
Yeah, just Jeff point in Shanghai, they're going to be hitting on all cylinders because the Y line was down, that came up. The 3 line was down, now that's up. So now that's why what Xander was saying earlier, possibly 80,000, maybe 90,000 in the upcoming months, is because now they've retooled it and now they can produce more than they were before. So there was some downtime. That's why this month's number didn't look as great, but now they really can kind of kick it into the end of the year and kind of put those numbers up.
Have they added the third shift?
I'm not sure about that. All I know is I believe the 3 is cranking and the Y has been cranking, but they were both down for significant, a couple of weeks, so it's now it's all systems go. We know Fremont, according to Elon, is killing it. So they must be putting record cars out every day. So yeah, good stuff. Okay.
Let's switch to a new segment that I called the Matador. And so who's the Matador? It's Elon. So let's talk about Elon. And the question I got for you guys is, how much do you think that Elon actually affects the stock? I did an analysis of all his tweets for the last several years. And surprisingly, people think that they affect the stock movement and it really doesn't. Or as Christian's been saying, it's always earnings. We all know this. Earnings every quarter. That's the one that shows not only a massive jump, but typically a sustained rise. And it's just obviously because Tesla's been growing, and so it's always been a rise instead of a fall. But Elon's impact, however, we know that he's been doing the Twitter overhang. So what do you guys think? Is this Twitter overhang really real? And is that the one that's absolutely depressing the stock, or is it that we're just using that as an excuse?
So let me comment real fast on this. Elon's tweets does move the stock. I've been witness to that. Not every tweet.
A day.
Tweets like, I'm going to sell my stock. Let's take a poll on it. If we know he's going to sell, that's the stock's going down. The stock's too high. And that day it went down. So his tweets can move markets. The 420 tweet, no, his tweets can move the market in the short term. Now, over the long term, it's going to be less of an impact. But in the short term, his tweets, especially if they're more direct, they can definitely move the market. So that's just my opinion. But Xander?
Yeah, I totally agree. I mean, chairs are underrated, right? So he really, I think it's little things that he says. So like in the earnings call saying, when you see a dip, it's a buying opportunity. That to me is just, it's it talks about the psychology of it, but it's without giving away or saying something that the SEC won't like. It's just a great way to communicate to your shareholders that now is not the time to be fearful. And to your second question, Herbert, whether the Twitter is an overhang, it really is, right? Because if you're worried that in the short term there will be sales pressure from shareholders, especially insiders, the money guys, the big money guys, they're going to sit on the sidelines, and they're not willing to take that risk. While you and I don't care, we're going long, and we don't care. At least I don't care if I get it at 850 or 1,000. So I think that it does have an impact. So Gary Black is great at getting a gauge on whether the big guys are starting to move in.
Yeah, I think it's also good to zoom out. I mean, pre-split, this is a $4,250 stock. And when you zoom out and you're like, well, you say like, what's Elon's impact on the stock price? It's going from $30 a share or so to 10 years later to $4,000. So I think I think we're in an uptrend. That's what the data says. And I think that's important to understand. But if you're looking at it day in and day out, sure, his comments and movements, the podcast he's on, the things he say, it will affect it. But you have to look at, to me, it's like, what are the actions in the background? The actions in the background are, there's this accumulation of activities happening that are putting the company in a fantastic position. So the other question on the Twitter overhang, it's an issue, right? If you look at the timing of it's a near-term issue. You look at the timing, so October is going to be Q3 earnings. First week of October, they'll get the delivery report. It should be really good. And then that's also the same month, I guess, the hearing is scheduled for this. So I think there can be some noise in the system for sure. Maybe it gets settled or dealt with before that. That would also be good. And I've seen different estimates on the total number of shares involved. If it's really 7 million shares, that's less than a quarter, I think, of a day's trading volume. So if it's handled differently and it's not dripped, over 20 days, maybe it can be handled differently this time, or maybe not at all. So we don't know. We don't know how this is going to happen. That's why it's called an overhang. But I think if you're, again, long term, when I say long term, I mean even just a year to 3 years. There's just so many good things happening with the company that you just have to deal with and look at these near term risks. It's kind of it's a result of how the company is being managed. So you're going to have near term risks based on its people. If they were careful and not investing for the future and not making the big decisions, I don't think we'd be in this position. Okay,
so tomorrow there's a settlement, and he has to buy Twitter, but instead of $54, it's at $44, something like that. What happens to the stock?
It's up. It'll probably be up because you take the,
Yeah.
well, let me give you some background why it would be up. Uncertainty is removed because the deal's done. We have a price, so that would go to the side, and then the fundamentals take, like Jeffrey was saying, center stage. How much? I mean, that's hard to predict, but I would say probably be up 5 to 10%. If I had to guess, 5 to 10%.
So that's your overhang. You think it's 5 to 10%, huh?
Well, the overhang's been going. I think it's already weighed on the stock, but my prediction is the Q3 and Q4 records that are coming will trump any short-term Twitter news. So I like that. That is my assumption that the business strength, the record. We've been over a million times, but this is what I've been pounding the table on: the record revenue, the record earnings, the record margins, the new factories coming up. All of that will trump whether he has to sell a half a day's worth of Tesla shares to make the deal go through. So that's what kind of Jeff was saying, bigger picture. And even long-term to me could be 6 months. Like 6 months from now, I think all that plays through and we're significantly higher.
By the end of whatever date it was, like mid-October, we're going to know one way or the other, right?
Yeah, but there's
chance.
Trial. Yeah, I mean, there are possibilities that... Right, I imagine that there could not be a resolution at that time. Is that a possibility? We need an attorney for this one. But yeah, it's possible that it'll just be lifted and then you have a run, right? But do you think that that Twitter has this much of an impact, Herbert? Since you're asking the question?
That's why I'm asking. I mean, the Twitter overhang, I don't really think it is much of an overhang. But of course, like you said, Gary Black does. And so the analysts seem to think it is.
But Herbert, I think the overhang already happened. It's still there because it's still going on. Yes, when it first happened, I think it was more friend of mine, CNBC's reporting it every day. It was a big soap opera. I think that soap opera is somewhat muted and Elon's been more quiet about it and more, wise with his words, through these later interviews as we get closer to the trial. So I think the circus that occurred already did most of the damage, and now we're just kind of like, at the end of it.
There really is no more uncertainty if you think about it, right? It's certain which way it's going to go. The worst case scenario, he's forced to buy at $50 billion, and he has to shoulder this $9 billion he still owes. He has to sell 7 million shares. That's the worst case scenario. So, you know what I mean? Like once you know that, then it's built in. I don't know. Oh God.
Yeah, no, I think you're right. I think that's the scenario is, he has to buy Twitter, and he could finance it. It doesn't mean, I don't know if he'll be forced to sell shares. He could find partners. Maybe there's some like there's things probably happen behind the scenes that we have no idea what's going on, that there's maneuvering. But Elon, he seems really good. He seems really upbeat. He was great at the meeting. He seems like he's in a jovial mood. He looks great. Yeah. So I don't think any of this stuff's weighing on him. I think he's having fun, and he's been talking about Tesla more in the business. So I'm feeling good about it.
Yeah, and ultimately, Herbert, it doesn't really. It really won't matter in like you said, zoom out 3 months or once you get past this. If you're not buying Tesla because of Elon's, it's a personal thing. Ultimately, when you talk about Tesla, you got to just look at the earnings, right? And this is what investing is you're looking at the fundamentals of the company. You might have some tiny impact from something that is happening in the micro, but macro-wise, I don't think any of it really matters.
So I've got let's move on to another new section here, which is going back to, is Tesla recession proof? Is it low risk? We saw the stock jump to 10%. We were all excited last week. This is it. We're past it. We got past 900, futures bright, and we're happy, old days again. And then this morning, it fell by 6%. So whiplash, but what is the lowest possible price that Tesla can absolutely go based on what you know as of today? last week, Christian, you said, I know for a fact it's not going to go below 550. So I went and started buying at 650. Where did these numbers come from? And given where we're at today, what's the lowest it could fall? I mean, give me a couple scenarios maybe, but if macro stays the same based on this gyration we're seeing, what can happen?
So great question. So I can't guarantee anything. I just, stream of consciousness, what I think, what I feel, my valuation metrics. So I thought we got too cheap in the sixes, and the forward valuation became compelling, knowing what Tesla was going to do. And I thought investors would see that, and it looks like that paled out. Now, could it come back down? Yes. I have no crystal ball, but that's not my scenario. Number one. Number two, you were right initially, Herbert, saying it's going to rocket by the end of the year. And I said I was more conservative. I said, no.
That's right.
The fundamentals still have to catch up. We had that initial run, like we would say on the Q2 print, and the bad news is over. And now we're looking forward. But then I said we would kind of grind into the end of the year, 950 to 100. So we have pulled back. My scenario is looking a little bit better than yours, assuming that, whatever, 1400 by tomorrow.
Yeah.
So I think the low is in, to be very simple. The 620 that we put in was the near-term low, or the low maybe forever. I can't say forever.
The low forever.
Yes, I mean, I think that was the bottom. I think the business, I can't say 20 years from now, in the next 5 years, I think that bottom is in. I could be wrong, but I'm positioned that bottom is in. And with a record Q3, 4, and another 50% growth in next year, I just don't see how we get down there. What's the mechanism? What's the valuation? What's Tesla going to trade at? 30 times? A company growing, revenue and EPS 60, 70, 80%. Why would it trade at 30 times? It just doesn't compute to me. So I think the lowest will go right now would be in the 8. I mean, could it dip back in the high 7s just to put a number on it? Sure, but I don't even think we, unless something crazy happens, I don't think we get under 800.
Okay. Jeffrey.
I think you look at macro for just step back for a minute. So we're in this trading range. We got down to 36.39 on the S&P, I think, on June 16th. And one of the analysts was quoted. They looked at the S&P, I guess, over the last 50 years. And once it's been in bear market territory, minus 20% on the S&P, if it does a 50% retracement, which for the S&P, I think would be 42.31. And it kind of stabilizes at that 42.31 and kind of starts inching above that. It's never retraced and tested the low again. So we're not at that 42.31. I think we got in the high 4100s, and now we're back at 41.22. So that's an interesting one to watch from a macro perspective, because like technically I like looking at technicals, but I like looking at fundamentals primarily, then see if the technicals kind of check out. So that was an interesting stat on the S&P and retracement. So obviously a big CPI print tomorrow morning should be interesting. I think a lot of this is going to be around the Fed movement, and the Fed movement, they're looking at inflation and they're looking at hiring, they're looking at jobs, and that jobs print was, if you were trying to see if they're going to lower raises, in September, that was not the job print you wanted. So I think we need to see CPI tomorrow morning. And I think if the Fed can take August off and not have to do anything from an emergency perspective, it gives them time to see another CPI print, another jobs report from August to see how the economy is. From a Tesla perspective, again, they continue to move risk. I kind of look at it from the left to the right. Like the left is like you're moving it behind you, and the right is there's risk ahead of you. And they keep knocking off these milestones and continuing. If they're really design locked and installing, for example, on Cybertruck, they're design locked and doing tooling installs at the end of this quarter. That's a big deal. That means that the way that product is produced, the yield projections, they understand it fairly well to be installing line tooling. So that's a big milestone for the company to be able to do that. So unless something bizarre happens from a macro perspective, I don't see them retesting those lows. So let's see how macro plays out over the next month or two.
Well put.
So you guys are saying that today's price is a low and it may not go much lower, maybe, depending what happens, but we should be buying right now.
So what I'm saying is, I think the 620 that we saw a little bit back ago is the low. Could it go lower? And could it be? Yes. I'm just saying. And again, this is just my opinion. This is not facts. I'm saying I believe 620 is the low. So if I have spare cash on hand and I want to be involved in Tesla, you can't time it perfectly. So if you're getting prices, at 1240 a few months ago, and now you're getting a price even in the 800s, and you want a dollar cost average in, I don't see why you wouldn't do it, because if you're just going to sit there and say, I don't own Tesla, but I would own Tesla at 400 or 500, I don't think that strategy is going to pay off, because I don't think you're going to get that price. The market doesn't care what price you want to pay. Like, if you see value in Tesla at 820, buy it. If you see value in Tesla at 860, buy it for the long term. If you don't, then don't. But I'm just saying, in general, I believe the 620 bottoms in, and I'll stick my neck out and say that. Now, I might look like an idiot in a week or a month or a year, but that's just what I've been saying, and I think we're on to highs going into the end of the year, even with a macro a little shaky. It might not be as strong, but I don't think that we'll get back down there if they can do a record 3, a record 4, guide for 50% next year. As an investor, as a logical person, I just don't see that playing out. Like, if that happens.
And it took a lot to get down there. It was multiple events happening at the same time that caused that. So, probability wise, like what can make the stock go down when their earnings continue to climb? And they look great.
Awesome. Thank you guys very much. Great show again, as always. So please follow Christian on Twitter at CValente, Xander
At CValente28. Yep.
ZValente28 for Xander at R6 Alex. You got the Stoic Bull Christian, the YOLO Bull Xander, and then what are we going to
We still don't
Jeff?
have a name.
Yeah, I think of him like a PhD bull or a professor bull. He's educated. He calls himself a very future bull, but it's all based on, I got to calculate these numbers, and they all have to.
We'll come up with a name.
The rational bull.
The rational bull.
Yeah.
I like all these good names. I want to give people the funny names. So yeah,
I'll take the rational bull.
We'll give him the rational bull. He's the rational bull. I'm the forever bull. And thank you guys very much. We'll look forward to you guys next Tuesday. Thanks, everybody.
It was fun.
Bye.
Later, guys.
Thank you.
See you guys.